Hey everyone, welcome back to a very important day. Obviously, this is going to be the inflation release in 29 minutes, and market is pretty much on the edge right now. So let's get this started with our session for tonight, which is new session number three, and obviously we are going to be looking at the inflation number, which is the CPI. Super important night. Okay, audio seems to be good from my side. Let me know if there's any issues, but everything should be okay. Let's get this started. My name is Virenjero, and so with a disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and we are expecting an extremely high volatility. There's a lot of uncertainty in the market right now. So market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of your transactions. You consider all possible risk factors, right? Okay, so a little bit about myself. If you have never joined our session before, my name is Viren Joro, and I've been a full-time trader with over 22 years of experience. Basically, have been a trading coach and technical analyst since 2007. My expertise is in the field of Ichimoku Kinko Hill. I'm also invited as a guest speaker at Trading Investing Expos across Australia, Invest Fairs in Singapore, as well as the ATA and the APTA conferences. Okay, so bonuses for participants. I'm going to show you the code soon after this slide, which is going to be for your 100% deposit bonus or double your deposit bonus. And then you should already have access to the private Telegram channel. And if you register through the website, you should receive this on the email. And I know if you have attended previous sessions, we've done this, I think, about very close to about 1.5 years right now. So you should already have access to those Telegram channels. But if you don't, please contact the customer support and more than happy to help you out with that one. Okay. All right, so this is the code NOFARM 2024 is valid until the 31st of December 2024. So make sure you are using the code when depositing into your Octa trading account. It is a 100% deposit bonus, which is good in terms of having that for your margin level. All right. So as per usual, we're going to go through some of the theory, and I'll try to go through this as quickly as I can because I do want to talk about the inflation number for tonight. It is rather unique and it's very special, and we anticipate the worst to happen. That's the way we should look at trading, right? We really want to look at the worst possible scenario, not to scare you guys off or anything like that, but it's much better to have this mindset when we take a look at the market. That way we can actually manage our risk a lot better. Okay, so what is inflation? So inflation is the rate at which at which prices for goods and services rises. Obviously, the most commonly used inflation indices are the CPI, and we're also going to take a look at the core inflation number as well. Of course, there are going to be other other ways to look at inflation in the economy. We could take a look at the retail sales. We can take a look at the personal consumption expenditure. We can look at the PPI number, which is released yesterday. It was a little bit softer, but not an indication that tonight's CPI is definitely going to be a little bit on the soft side. So what is the CPI? So obviously the CPI is a critical indicator of pricing pressures in the economy. It provides you with a gauge of inflation. And forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. This is very important because a lot hinges on tonight's inflation number because the FOMC is currently being pressured into cutting interest rates. And obviously, we are probably going to be looking at a live cut to happen in September, but whether or not that could happen hinges on the inflation number tonight as well. I'll explain that a little bit more later on. But looking at the CPI number itself, it basically is from the consumer side of things. It measures our cost of living. It includes broad range of goods and services purchased by consumers, which includes international personal consumption items. Scope excludes changes in interest rates or costs. Well, the PPI that was released yesterday, it's more on the producer side of things. So CPI is how much we're paying to buy stuff. The PPI is how much it costs to, create that product. Okay. So it measures real growth in output, includes items produced for personal consumption. It does not include imports. So, trade balances obviously is going to play a huge factor into how we determine the PPI numbers. And this is the one main reason why we can't say, okay, we got a softer PPI, therefore we should get a softer CPI. Because it doesn't include imports. Okay, and the other thing is that it encompasses services with prices, including an interest rate component, something that CPI does not include as well. So it does kind of show you a different thing. Okay, so don't anticipate that. Yeah, we have a softer PPI yesterday. We should have a softer CPI. That's not going to be always the case. Okay. All right, so the next thing that we want to focus on is obviously the core number. So the core inflation basically refers to the changes in prices of goods and services, excluding those from the food and energy sectors. So this is basically CPI minus the food and energy sectors because they're a little bit more on the volatile side. And in terms of food, we're talking about fresh foods here, obviously seasonality and stuff like that. That could push prices higher or lower. So it is a volatile sector. Obviously, energy prices, it is also a volatile sector. So, this fresh foods and energy are taken out to show you the core CPI. And it is a much more correct underlying of the inflation, and this is basically the main focus. If central bank is talking about a target rate, typically they'll look at the core CPI number. For the US, it's called core CPI. I believe for Australia and Canada, they call the mean CPI, and that's basically the same thing. It's just different countries have different, ways to say it. Okay, so we got the theory out pretty quickly. I do want to spend a little bit more time and explain to you the current situation. Let's take a look at the expectation for tonight. So let's focus on the core inflation rate. And if you take a look at the core inflation rate, we are expecting, and I did mention this in the outlook, the consensus is 3.2, but the forecast is 3.3. So if you guys are wondering what's the consensus and the forecast, consensus are basically kind of the official surveys done by, to the economies. Forecast, it depends on where you get your data from. So in this case, I'm getting it from Trading Economics. Their team basically have their own forecast, which is at 3.3%. As I mentioned on the Outlook on Monday, it basically tells us that, yeah, the market is not quite sure whether or not they should really price in a huge drop in inflation. So at this point in time, I don't think there's a lot being priced into the drop in that inflation number. So if we have that core CPI dropping below 3.2%, maybe at 3.1, 3%, I think that's basically a green light for the rate cut to happen in September. We could get risk appetite coming into the market, which is something that we want to focus on. And then take a look at the inflation rate year on year. This is the headline inflation or the headline CPI number or the CPI year on year. But unchanged at this point in time. Previously on Monday, we still look at I believe it was a 2.9% consensus. But right now, if we take a look at the whole thing, it's currently at 3%, right? And, we're not expecting any changes. So market kind of, be on the sideline at this point in time. Some of the economists kind of changed their outlook on the inflation number. That's why it's never a fixed number in terms of consensus until the data is about to be released. This is the current consensus. Current consensus is for inflation to remain flat at 3%. A lot of risks are, tonight there's actually going to be a lot of risks, right? If you're not familiar with what's going on in the market, obviously we should take a look at the crash from Nikkei that kind of leads to, every other risk assets out there. It's not just the equity market, but it basically started from how the Bank of Japan was, being forced into hiking their interest rates. I think this is more on a political reason rather than anything else. And then there was that intervention that happened from the Ministry of Finance and the Bank of Japan to the dollar Japanese yen, euro yen, sterling yen. We saw what happened here was that there's a huge carry trade unwinding. And if you're not familiar with the crashes that happened during the global financial crisis, I actually did a research and a study on this one here. the main underlying reason why there was actually a huge panic in the market was because there was that huge carry trade unwinding. So it is what we call a period of easy money, right, in terms of the interest rate differentials. But things are changing up right now, and to make it worse, we have the NFP numbers that we were trading live. It was a rather unique NFP number. It was really weak. At the same time, the unemployment rate really went up. It went up to 4.3%. So let's put A and B into perspective. How does that link into the inflation number that we're anticipating today? So the unemployment rate has been going up. So in terms of the real economy, I think um, you know every normal human being out there that's not in the financial sector is kind of feeling the pain of the inflation, right? Um, Jobs are being lost. Obviously, there are layoffs because cost of inflation goes up with it. At the same time, if the company wants to save some money, they need to kind of do some layoffs. Obviously, that's going to push the unemployment rate up, right? Now, one of the main reason why market was jittery last week, it's because everyone was talking about how the FOMC is behind the curve. They're no longer able to contain or manage the inflation well. They're not able to you know, kind of manage the labor market as well. And that basically causes some insecurity in the market in terms of how the FOMC is handling everything. And, if unemployment rate continues to go up, it could potentially lead to, a crash landing instead of the soft landing that the FOMC was aiming for. So the pressure here with the higher unemployment rate is for the FOMC to cut interest rates and let everyone breathe, right? Because interest rate was high, with unemployment rate being so high as well. If you reduce the interest rate, maybe it's easier for companies to maybe employ people again, right? Kind of kickstart the economy again. But at the same time, the main problem that we have here is that inflation is not coming down. The reason why interest rate was high was basically to control the high inflation. So what if the inflation number comes in higher than what the market consensus is, which is unchanged at 3%? What if it posted 3.1? What if it posted 3.2, 3.3? We don't know. But if it posted a higher inflation number, it will cause a huge panic in the market because the argument for it is this: high unemployment rate, the FOMC needs to cut interest rate, but they're not able to cut interest rate if inflation continues to go up, right? If they cut interest rate when inflation is going up just to help out the labor market, it will actually cause inflation to continue to go up. Therefore, remember, the FOMC's job is to contain inflation while at the same time managing the employment side of things, right? The labor market. So this is a vicious cycle because unemployment rate goes up, market needs a rate cut, just to let everyone breathe a little bit, makes everything easier for the normal American out there. But if they cut interest rates, then inflation could potentially bounce back up, right? So if the inflation number comes in higher tonight, I do expect a little bit more of an extreme volatility because then market is going to be really confused, right? High unemployment rate, high inflation. What if the FOMC is unable to cut interest rate for that one very reason that inflation continues to go up? At the same time, labor market needs that rate cut. It's going to be a really tough decision that's going to create a lot of risk aversion in the market. Riskier assets could lose their positioning, equities could crash. The worst case scenario is that if inflation, kind of picks up really high. Okay. Now, the best thing that could happen here for risk to come back into the market is for the inflation rate, the headline, CPI, year-on-year CPI, to drop below 3%. If it posted 2.8, 2.9%, then I think we could see a rally in the stock market. We could see a little bit of a rally on the Euro USD, the Pound USD, dollars USD, every other thing. We could see US dollar weaken. Okay. So that's one of the things that we're looking out for. So we've got two scenarios. The worst case scenario is inflation comes in higher 3.1, 3.2, that's going to be really bad in terms of the sentiment in the market that's going to be affected. Doesn't necessarily means that it's actually going to boost safe haven immediately. So be very careful on that assumption. And also at the very same time, even if inflation goes up, don't have that assumption that yeah, the US dollar should rocket up. At this point in time, I'll show you on the volumes later on. Everyone is pretty much on the sideline right now, okay? Because after what happened last week, huge lessons to learn there. That yeah, I think there was a little bit of a panic that started in Japan. The Nikkei dropped by 30%, and then there was a contagion to all the other assets out there. Good thing is it was contained within 24 hours. If it had extended, to beyond 48 hours, it would actually cause. Right now, this week, we'll probably be looking at a financial crisis at this point in time, right? Right now, we don't have that. But as I say, if the inflation comes up, it's going to take a lot of the risk sentiment out of the market. People would tend to avoid the market. We could see the equity market crash. If not today, the Nikkei could crash again tomorrow. That's one thing. Second worst thing that could happen is, remember how there was that bad data from the US last month, and then the Bank of Japan kind of just intervened into the market and kind of pushed down the US dollar there. I don't think they're able to do that because I think they kind of admit in terms of the crash in the Nikkei last week that it's partly is their fault in terms of how they communicate stuff and how they do stuff. But, we're not ruling that out. That would be the extreme worst case scenario if there was an additional intervention. It would cause carry trade to unwind even further, and then that will have contagion effect into all the other financial assets out there. Okay? So this is from the data for tonight. And, if we take a look at what's going on here, I think we're kind of at the bottom right now, 3%, right? For the past 12 months, from last July up until now, we haven't seen inflation drop down below 3%. So any progress below 3%, I think that's going to be a big hurrah for the market. That's going to send risk sentiment up, right? That's going to cause a rally on riskier assets like the Euro USD, Pound USD, even crypto. That would be considered risky assets at this point in time. So that would be what the market is kind of anticipating. And I haven't priced this in because if you take a look at the consensus here at 3%, that's probably why you didn't actually see a lot of price movement here. We probably see some pricing in today, but I don't think it's fully priced in. So if it drops below 3%, again, it's going to be a big hurrah. I think we should see the US dollar weaken. We should see everything else gain, right? Now, rate of change per month. Obviously, something has changed here. The previous number, we have seen a negative 1% growth on the rate of change every month. And I think that's a good positive. But if we take a look at the consensus for tonight, it is actually a 0.2% growth on a monthly rate. Now, if this number goes up higher than 0.2, let's say 0.4, 0.5, it will still indicate, even though if there's no change on the inflation number, right? If the headline stays flat at 3%, but if we see that monthly rate goes up, at 0.3, 0.4%, it would also be considered to be a potential increase in inflation. This will be a mixed data, okay? Hopefully we're not getting a lot of the mixed data here tonight. Hopefully it is one-sided. But as a trader, I always, think about the worst possible scenario, and the worst possible scenario is basically what I've just explained tonight. If we have a higher inflation number, this is going to be really hard to trade. Okay, so just be mindful. Again, previous NFP, we were not doing a lot of the straddles on the strategy here. And again, same thing for tonight. I think a lot of the market has already, kind of start moving today, especially on the back on the higher than it's lower than expected, but we see a bounce on the UK inflation. In terms of sterling, we do see a little bit more volatility there. All right, this is the core, and you can see with the core here, this is a steady drop to the downside. Again, we're still expecting core to drop down 3.3 to 3.2, or it could actually stay at 3.3%. But what I'm trying to say is, I don't think the market has priced in any of the expectation for the inflation number tonight. So I do expect extreme volatility. I do expect a very wild swing to happen. I expect liquidity to dry up. So just be very mindful in terms of how we're doing things tonight. Okay? If as per consensus, would it be a whip? Um, Probably not, because if the headline inflation comes in as per consensus, it'll be at 3%. We didn't see any change. It really then depends on the core inflation number. If the core inflation number drop or does it pick up as well? So we need to look at all the other data. If this one is comes in as per consensus as well, then we would actually see a drop from 3.3 to 3.2%. At this point in time, it's not going to be a fast enough drop, but the FOMC would probably say, okay, at least the inflation is contained. The current situation doesn't get worse. Inflation doesn't pick up again. We can still go ahead, maybe with one rate cut, and see how the market reacts. That could be the view on the FOMC. Okay, all right. So we got a couple of time left here, but let's take a look at some of the stuff here. And the reason why we're not able to, it's risky. It's not that I'm not able to. I think it's a little bit risky if we want to straddle the market here. Market has only gone quiet for the past 4 hours. Previously it was already rallying up today. So this is actually going to be really tough. Let me show you on the daily time frame in terms of what we're projecting. Remember, on the outlook, we still have 1.10 and then 1.1050. So ultimately, 1.1050 is going to be kind of the toughest resistance to break, which is not really too far from the current price level. So if you do want to straddle this, then it is risky, because let me give you a little bit of a perspective into things, right? The market has gone quiet for only about 15 pips of range. This range is too small, right? So if I were to straddle the market by having a buy stop here and having a sell stop down here, it's risky, because the market, we didn't give enough room to the market, and in all honesty we just don't see that corridor of volatility to happen. So this is a very risky trade if we want to buy stop. If we want to straddle the market, if we want to have a buy stop and a sell stop here, because we just don't have enough room. The worst thing that could happen, because the range is so small, is that you could get triggered on both sides before we can actually react to it. So I I wouldn't straddle the Euro USD at this point in time. Now, the Pi USD, this one here, again, if you take a look at it on a 15-minute time frame, this is going to be really tough to straddle. We're not looking at the corridor of volatility, but if we take it out on the hourly time frame here, we might get a little bit of an opportunity to create a little bit of a buy stop. Just about here, right? If we take a look at that, that would be about 1.2875. We could do that, but at what cost? That's going to be about 22 pips away from the current price level. Now, in terms of the sell stop placement, this has to happen below 1.2825. But if we adjust this to 1.2825, price was just basically bouncing off that. So therefore, the safer sell stop is actually a little bit lower at 1.280. What would that tell us? There's actually a 75 pip gap between the buy stop and sell stop. This is a huge risk because if any of this get triggered, it means that our stop loss is going to be about 75 pips. So something to consider as well. If you're thinking of trading, all right, maybe I want to trade the pound USD here. And in terms of where it is right now, I think the pound USD is actually in a better position. At least the inflation number, kind of bounces up a little bit. That would put the Bank of England to say, you know what, we're probably not going to be cutting interest rate. That should boost the pound USD a little bit. So I'm okay with placing a buy stop at 1.2875, but in terms of the sell stop, it has to be at 1.280, because otherwise we're going to be looking at spikes going on in the market. So again, we'll come back to this very soon. We'll see what happens here. The dollar Japanese yen is probably the one that's kind of okay in terms of having the buy stop and sell stop. However, the established range that we have here is actually between 148 to 145.50. That is 250 pips. So if you're okay with 250 pips as a potential risk, then yeah, you can probably buy stop. You can probably straddle this, but we have to go with a higher time frame. If you try to do this on a 15-minute time frame, we just don't have that corridor of volatility. Therefore, I was expecting market to stay quiet until the release of the CPI, but we're not looking at a quiet market at this point in time. Aussie USD again, we have 66.50. This one it's okay, I guess. If you want to put it, you can adjust the buy stop to 66.50. Let me just get this there. There we go. So all right, so we got 66.50. That would be an okay level to create a buy stop. In terms of the sell stop, you probably want to have it below 66. Okay, so this is probably the only thing that I'm willing to take on right now at this point in time, because at least in terms of range, this one here makes a lot more sense, right? New Zealand USD, we're not able to do that. We have that rate cut that happened today from New Zealand. It was a surprise rate cut from the RBNZ. Taking a look at this, I think what we're looking at here is probably more of a potential flag at this point in time, or at least on the early time frame. So, in terms of sell stop, I'll probably go with a sell stop, but in terms of a buy stop, it's probably going to be at a higher price limit at this point in time, right? So the sell stop we can go with yeah, 60 cents. I think that should be okay, but buy stop it's probably going to be a little bit higher at 60.30. Okay, so let's do one very quickly before the news gets released, and we got 3 minutes. Not to worry. I just want to talk about gold a little bit. So in terms of gold, we still have that resistance at 2485. So if you want to create a buy stop on this one here, you can do that at 2485. But keep in mind, it has to be a very quick trade. You have to immediately set a target 2500 because we basically just want to snap on that um, trade there. But I don't know why my trade levels are not showing up here. But yeah, with this one here, I need to modify the order here to have our take profit at 2500. And in terms of the stop loss that we have here, again, it's not going to be a good risk reward ratio. I don't think it's actually going to be a really good risk reward ratio at this point in time. Um, you can probably go with 2485 as your entry. All right, I'll probably go there at 2485. Right, and my stop loss. This is going to be really tough because I don't actually have a lot of room for this one here. So maybe 2450 is kind of the max. But if you take a look at that, the risk reward ratio doesn't click. Right, we're not looking at a one-to-one risk reward ratio, so we might push this up a little bit higher. Hope maybe we might get a little bit of a spike there. But in terms of the sell stop to happen on, sorry, this is on the daily. So let's go into the early time frame. Right, so we have the buy stop up there, and then in terms of the stop loss, about 2450. That's pretty much it. And if you're thinking, okay, what about our sell stop? Well, your sell stop is going to be at 2450. Simple as that. It's going to be at 2450 because if your sell get triggered at 2450, we should kind of reverse the position. All right, news is going to get released anytime soon. Keeping a very close eye onto everything right now. Good morning. Sorry, I just had a time to look at the chat here, but yeah. Doses and everything else will look after the number gets released. I don't really like taking a lot of risk for tonight, and we have to be really quick-footed on this one here. I have to be like trigger happy in terms of the current trades that we have here. So we can straddle the Aussie, we can straddle New Zealand, we can straddle gold if you want to, but in terms of whether or not it's actually sustainable, that's going to be dependent on how the inflation number reads out. Okay. All right, here we go. Whew. Okay, anytime. 0.2% core inflation monthly growth as per consensus. And yeah, we have inflation coming down at 2.9%. So we should see risk assets come back into the market here, but core inflation 3.2 as per consensus as well. Non-reaction from the market at this point in time. All right, not taking the Euro USD again. As I said, the range was too small. You could probably get whipsawed here. I'm just waiting on anything to see the market is reacting to this. There's as per consensus. Core is at 3.2. Headline inflation drop 2.9%. not looking at any reaction in the market. This is pretty surprising. So let's wait a little bit. Let's see what happens in the first minute. Non-reaction in the market. I guess everyone should be happy. I think everyone is happy here. CPI, yeah. Is it a mixed number? I think it's as per consensus. I'm happy to go with New Zealand short on this one here, but let's take a look at the Euro USD, Pound USD, Dollar Yen. No, we have to be really careful with this one here. I'm not changing the orders at this point in time because if the market is in a volatile state, it should actually snap through all of this in an instant. I think for now, it's a little bit on the safer side. Let's take a look at VIX. VIX is stable. It's really surprising, actually. VIX is hasn't opened yet. The U.S. market hasn't opened yet, so we don't have the S&P 500 reacting to the VIX here. But pre-market indication is towards 1837. Okay, interesting. So yeah, no orders has been triggered. Okay, let's cancel out our stop orders for now. Okay, we don't want to look at any straddle. We just don't have any breakout of the current range at this point in time. And if you had straddled the euro, you would already be in a losing position, right? So good thing we didn't straddle the euro. It was not in any condition for us to straddle the euro. The pound USD hasn't broken out of that range as well. 1.28 stays intact. 1.2875 stays intact. Dollar Japanese yen still within range as well. Resistance at 148 still intact. Support 145.50 still intact. Aussie USD, if I didn't take it out, you know, probably gonna get our stop order kicked in, but 66 cents, we're not going below that at this point in time. So I think New Zealand USD is still probably gonna drop a little bit lower, but we'll see what happens here. But yeah, we don't have a lot of reaction in the market. This is really surprising. I think it's something I would say it's actually really positive because I was anticipating the worst case scenario tonight. We could actually see the market melt down. But for now, this is I'm happy with how the market react to everything else. Okay, we should see risk assets return to the market. We might see one more cycle to happen at least on the 50-minute time frame. As long as it doesn't drop back down too far below 1.10, we should be okay to potentially use more of a limit order on the Euro USD. But I'm waiting for this one here. Let this one test 1.10. I want to see the reaction at 1.10. But logically, with the Euro USD, it shouldn't go any lower than 1.0980 for it to actually go up. Okay, so if you're thinking of going long on this one here, I think we could be okay with a limit order, right? In fact, we could go with a limit order at this point in time for the Euro USD. I think in terms of the data, we saw a softer inflation number. So I think it should be a positive for riskier assets in market. So let's look at this. And what we're looking at, 1.0980, right? About there, we could probably be looking at a little bit of a buy limit. Okay, 1.08, 1.0980. About 1.0980, 81. Good to have a buy limit there. In terms of stop loss, I probably wouldn't go too far on this one here. I'll probably go with a buy limit on the Euro USD here. In terms of stop loss, I don't want to risk too much. 1.0950 is how much I want to risk on this one here, because if it does break 1.0980, then I should target 1.0950. Target level for this one here, I would go with the 1.1050. But yeah, I'm just not looking at any reaction going on in the market. In terms of risk reward ratio, I think it is more than 1 to 2. This is an okay trade. To me, I think it's an okay trade. All right. Month on month both got higher. Yeah, core was 0.2. I think it's as per consensus, so I'm not really looking at much of a change here. The headline inflation is actually below 3%. I think again it comes back to the market thinking, okay, it's not dropping down quick enough. But yeah, what can we say? We're just not looking at any huge reactions in the market at this point in time. Pine USD, let me switch back to this. I think this should give me a much better understanding of on what's going on here. Pine USD, at the very least, on the hourly time frame, this is Blood Ichimoku Cloud. It could actually break down to 1.2820. Sorry, also again the 50-minute time frame. I should be looking at the hourly time frame. Yeah, the hourly time frame on this one here. Can we classify this as a potential flag? It does kind of fit that description for a potential flag to happen. At the very least, we have that resistance trend line capping it. But in terms of range, this is what it is. I think we're still anticipating a potential flag on upon USD. I think the only anomaly that we have here is the New Zealand USD because this one here is, surprise rate cut from New Zealand. I think a little bit more on the negative side on in terms of New Zealand. But if 60 cents hold, that's going to be a tough call. We need to break below 60 cents. Otherwise, we're not going to be looking at any progress for New Zealand USD. All right. That's right. Okay, so we got Euro USD, Pound USD, non-reaction. New Zealand USD is still non-reactive as well. Aussie USD is flat. Changes in crosses. Let me go with currency crosses again. Non-reaction on currency crosses as well. Let's take a look at it. Sterling, yeah, non-reaction on all the currency crosses as well. Okay, this is starting to. I'm actually starting to get worried. Too calm for what it is. So either a lot of traders are just going to be sidelined, waiting for reaction in the Asian market tomorrow. That could be one reason. Waiting to see how the stock market react to this data. That could be another reason as well. But what I'm looking at here, we're just not looking at the volume. We don't have a significant increase in terms of the volume that we have here. It didn't exceed what we have today. So volume wise, we not looking at a lot more buying on the Euro USD and Pound USD. I would say that again, dollar yen it was also buying on the dollar yen, so that's probably kind of what's gapping the market. Volume increases, um, but not looking at any breakout. This is unique, even for gold. We're not going anywhere for gold. Okay, this is weird. This is extremely weird because I was expecting the worst case scenario. I guess this is actually a relief for a lot of traders, which is good. So, is it? Should we start looking at any position right now? Is it much better to be sidelined? In my opinion, I think a lot of traders out there are still being sidelined. And what does that mean? A lot of traders don't have any existing position or looking to have a position at this point in time. I think what happened with last week in terms of how the Nikkei kind of drops 30%, I think market is probably anticipating to see what's the reaction in the Nikkei there. Is it going to be a positive reaction? I think we should also focus on the equity market a lot more for today. Let's take a look at the Nasdaq. Maybe there's going to be opportunities in the again nothing. Okay, this is super weird. Non-reactive on Nasdaq. If we had straddled this, it would trigger our buy stop and a sell stop. We would actually be in a lot of pain. So yeah, because we don't have that corridor of volatility, and again, there was a lot of uncertainty right now in the market. That's probably why it's good not to have the straddle strategy. And tonight, even if we don't have any trades triggered, you know, hey, having no trades is also a position that we take in the market. We don't expect to take trades every single month, and yeah, tonight we just don't have anything at all. Okay. US 30 again, I think this is a little bit more on the flat side. I think US 30 is so close to 40,000. We could potentially move higher towards 40,000 at this point in time. So indices on the US 30, we could look at 40,000 potentially today. Might see a little bit of a retracement here and there, but didn't even close down below 23.6%. So maybe max, if we see the drop in the equity market, probably going to be looking at about 39,600, 39,500 max. No, not even 39,500, 39,550, maybe around this area here. About 50%, 38.2%. This is kind of the anticipated correction to see. But if on the other time frame it doesn't cross down below the 23.6%, which is 39,700, then I do anticipate for price to go a little bit higher towards 40,000. That's kind of the anticipated movement on the US 30 at this point in time. The S&P 500 is extremely flat again. If we had straddled this, we'll be in a lot of pain because you can see what happens here. It does spike out of the range that we have here. So if we have our range here to there, it would trigger your buy stop and your sell stop, right? And that's the reason why we don't want to have that buy stop and sell stop today for pretty much any other thing out there. And because within the first 5 minutes we don't see any strong reaction to either side, yeah, I would be a little bit more on the patient side, at least for what's going on today. Is risk on, sir? I don't think so. If we have a risk appetite that returns into the market, we would have seen the Euro USD rally up significantly. We would have seen the Aussie USD probably breaking 67, Pound USD probably approaching 1.29, gold probably rally up. We're just not looking at that risk there. And even on Bitcoin, which is, yeah, it's non-reactive. So is risk returning into the market? All I can say here is that no, risk hasn't returned to the market, because if risk has returned, if risk sentiment was positive, all the other risk assets right now, everyone should be buying it, right? Especially with a lower inflation number like that, you know, I don't think it's enough to trigger a risk on mode at this point in time. I'm just not looking at any progress on anything. So yeah, can we breathe a little bit of relief? I would say so, yes. But I'm in completely no rush to kind of start buying it or selling it. We're just not getting the movement at this point in time. Can we explain why didn't the straddle not work? Okay, the simplest thing with the straddle here is that we want the corridor of volatility, and that's why we run the theory sessions. It's just that unfortunately, the theory sessions that we run, not a lot of people actually want to attend that. This was actually discussed there. And to put it simply, the reason why we don't want to straddle here is that market was already moving up, right? What we see here is that market has already started moving up. If market was quiet today and market stays within range like so, then the straddle would work. Okay, but because market moved up before the CPI release, we don't have the corridor of volatility. We don't have that accumulation phase. If we don't have that, the straddle will not work. Simple as that. So for the straddle to work, we need to see that the market, before news gets released, remains in a range bound market condition that we can define as potentially a rectangle. Simple as that. We don't see that, we cannot use the straddle. Okay? Hopefully that kind of clears up a lot of things. Now, let's take a look at the pound USD. Again, we don't have that corridor of volatility. We just can't straddle this thing. And if we were doing that on the 50-minute time frame, this thing is moving down. We're not able to straddle this. If it's flat in a range bound market condition, then yeah, we could straddle it, but we're just not looking at that. Aussie USD, we could potentially straddle it, but because we are looking at a random number in between, you have to kind of look at the range here. 66.18. I don't think anyone's going to pay attention to 66.18. So the next logical thing is actually having it at 66 cents. That's the more logical way of looking at opening a position on the Aussie USD. So yeah, that's probably why. Sorry, that's not probably why. It's the reason why the straddle just will not work tonight. And if you don't have the know-how and you just blindly kind of straddle it, you know, your buy stop and your sell stop is going to get triggered, because you'll be looking at this small range here to straddle the market before news gets released, right? And so you would actually trigger your buy stop, it will trigger your sell stop and give you a lot of headache, because then price doesn't go anywhere. We saw that spike up, we saw that spike down, price doesn't go anywhere. And the reason why we didn't straddle it, we just don't have enough volatility. One, we don't have that rectangle, we don't have that corridor of volatility. The other thing is the range was just too small. If I were to create a range here, if I were to say, oh, you know what, this is my corridor of volatility, it doesn't make sense because the range itself is only less than 11 pips. That's not a corridor of volatility. We can even let the market breathe. That's why we don't straddle the market here. Okay. From the current movement, could we say market is kind of hesitating? Yes. We didn't immediately see a risk return to market. This is a concern. This is an extreme concern. Because if everyone is happy that, oh yeah, the FOMC is going to be cutting interest rate, oh good, inflation comes down below 3%, wouldn't that be something that should trigger everyone to be in a buying mood? We're not looking at that. So this is why I say this is too calm. And I'm actually concerned because we don't see an immediate reaction. Because if we don't see an immediate reaction in the market, you know what everyone is thinking right now? All the traders are probably going to be looking at this and say, okay, why isn't this moving up? Could there be something there? What's a breakdown on the inflation details, and stuff like that. Obviously, we can look at some of the news releases. I think this has been popping up there. But in terms of what it is, the numbers, we need to take a look at the numbers. I can't just go on the numbers here and say, okay, this is the fundamentals for today, but I need to look at the breakdown of the numbers. That might be something there that potentially could cause a little bit of a concern. I'm just not looking at this and say, yeah, everyone's in a buying mood. We're not looking at that. Um, so either that or everyone's waiting at a lower price, or maybe the Euro USD, for example, here has gone past 127.2. In terms of resistance, we got 161.8, very close to 1.1050. Maybe people are looking at that. So I'm just not looking at anything right now. It's really tough to make a decision in terms of having a position here. I think what a lot of traders are going to be looking out for is whether or not how's the reaction on the equity market. So I think the main focus for tonight is actually going to be the stock market. So be mindful of that. I think trading opportunities would actually come in on the stock market. All right. So Nasdaq, definitely something to watch out for. I think we are looking a little bit of a push higher on Nasdaq here. But in terms of how far it can go, we're still looking at 78.6% on the Nasdaq, which is 19,100, capping the market. What if it didn't surpass that level there? A lot of stuff to consider as well. But yeah, if the mood comes back, equity market will be the first to react to it, and I think we should see that gain happen first in Nasdaq, not the S&P 500, not the US 30, because some of the riskier stocks to buy is in AI, and that's in Nasdaq. So let's see what Nasdaq does tonight. But I think this one here can push a little bit higher. I think once it breaks 78.6 beyond 19,100, it could potentially push towards 19,500 if the stock market kind of rally up. But if the stock market does not rally up tonight, the sentiment could sour. It would be a risk-off situation tomorrow. So just be mindful of that. I'm just not looking at anyone returning to the market at this point in time. Okay? And if you want my personal take on this one here as a swing trader, I'll probably say away as well. The drop in inflation is just not that significant. And considering that we have that monthly growth as well, what's the go here? I think it's a little bit of a mixed number. You need to look at the breakdown in terms of what's the composition of the core CPI as well as the CPI itself. No, not much of a market mover. And am I worried? Yeah, I don't like a quiet market. I just don't like a quiet market. And if you see a market that's supposed to be reactive to such a volatile news, all we see is non-reaction here. I would probably just, you know what? In 10 minutes time, my window to news trade has already gone past. In fact, it has already gone past, right? In terms of on the scale that we want to trade the news, we should already have a position by now. We just don't have that position at this point in time. So yeah, if you are still trading based on the news, forget about it. We're not looking at the scale now. I think we should go back into looking at the technical numbers on what we have here, the concerns that we have here. But I would say for tonight, we're probably going to see a rally or a drop happen in the equity market first, right? Any changes in the equity market would happen here at this point in time. But yeah, let's take a look at some of the indicators out there in terms of the stock market. What can we look at? Microsoft pre-market 41415, 41455. Not much of a difference in terms of where their open is. You could see that rally happen. Nvidia pre-market 118. I think we should see a little bit of a push up on Nvidia. Might see a potential return if it does break above 120 to 130. So for now, pre-market is still on the higher side, but everything else is pretty much flat at this point in time. New Zealand USD on the daily time frame, does it count as a sideways market condition? No. I don't think this is considered a sideways market condition. So let me show you what happened. We break below the Ishimoku cloud in terms of the correction rejection today. We already got that rejected at 78.6%. If the daily closes like this, I'm okay with shorting New Zealand USD, in all honesty, with you guys there, because if it does close below 60 cents, then we would be looking at a new swing in the market, especially with a daily close like that. You could potentially target 58 cents on New Zealand USD if it does break below 60 cents. A lot more room to go for a swing on New Zealand USD. What is the effect of the CPI result to US oil so far? Did you guys Were you guys keeping an eye out on what's developing in terms of geopolitical tension? Ukraine took over some of the regions from Russia, which is surprising. Again, you should- things are actually intensifying again over there, but we're just not looking at that reaction there. I think for oil, we're still capped by that $80. We're still capped by the Ichimoku cloud. Really depends on what's going on today. If it does close below 78, we'll actually see prices kind of drop back down 76, 75, but non-reactive. I'm just not looking at anything that's being reactive to CPI release today. Okay, none whatsoever. On the hourly time frame, XTI is still inside the Ichimoku cloud. Brent is also the same thing, probably a little bit more on the stronger side for Brent, but yeah, non-reactive at all. Look, don't be disappointed. I think it's good, right? Because I was, in all honesty, with you guys, I'm expecting the worst thing that could happen. All right. In fact, now I've pretty much been sidelined for after the NFP numbers. I think I've been sidelined post NFP number that Friday. I've been sidelined because I think there's a lot of concern in the market here. If that the CPI shoots up tonight, we could see an extreme volatility in the market. We could see VIX spikes up, whatever, right? We could see another crash in the market. But for now, it's stable. I do not like the quiet market condition. Um, it is what it is. We've gone past our window to trade our news trade. There's nothing we can take in terms of what we had just now. Nasdaq close 1900, call 18900, put, sir. Well, probably wouldn't want to discuss the call and the puts here, but take a look at what it is. Okay, I think for Nasdaq, as simple as that, should be reactive tonight. Let's see what happens here, but we need that break above 19100. Otherwise, we're not going anywhere, right? We just don't have anything. We have zero on this one here. RSI does indicate that this is still above 60, this is still above 70. I don't think this is overbought at this point in time. I think the trend remains sustainable to the upside. Stochastic is about to cross. I think we could cross 19,100. If 19,100 was surpassed, then our next target for this one is 19,500. This for Nasdaq. Meta Apple, about the same thing. We already take a look at Apple just now. I don't think there's anything that's different from what we discussed yesterday. But yeah, Apple, nothing much in terms of what we can do for Apple here. I think it should progress as it is. We should see a potential return towards 250 for Apple. And for Meta, sustainable. 527 pre-market. It's about the same level as the close yesterday. Not really expecting major surprises here, but Meta, can it push higher? I think we could see 550, 575 on Meta. But are you buying it at the current price level? It's a little bit too high. This on the daily time frame. If you go onto the hourly time frame, we're just not looking at anything like right now. We might get a better price, 510. I wouldn't buy it at 500. If it hits 500, I think it could actually go down a little bit lower than 500, maybe 490, 480 on Meta. Okay. Okay. All right. Wow. Probably wrap things up a little bit earlier today. We got zero, nothing, non-reactive to anything. The New Zealand USD, I'm waiting for an hourly close. I think if you're looking at the support trend line we have here, you know, if that hourly close happened, it would actually confirm a bearish flag. At least on the pound USD, it's the opposite. I think we're looking at more of a bullish flag. But yeah, New Zealand USD is probably the one I would take. But since it's so close to 60 cents, I will probably wait for a break below 60 cents. That's it. Dollar yen, nothing. Still below 148. Not dropping below 146.50. Tough call. Unable to do anything, unfortunately. Okay. All right. So again, this is the code NONFARM 2024. This is TW deposit bonus, so make sure you're using the code if you're depositing into your Octa trading accounts. But yeah, code is expiring on the 31st of December 2024. Non-reactive tonight. All I can say is be on guard. I just don't like a quiet market like this. Things can change easily. Sentiments can be swayed if there's any negative number that comes out that could kind of shift up the view that yes, the headline inflation dropped down from 3% to 2.9%. Monthly growth gains, but it is as per consensus. Core CPI dropped down 0.1% as well, in line with consensus. It's just not dropping fast enough, you know? Just be mindful of what the market is anticipating, all right? Okay, no questions for tonight. If there are none, then let's wrap it up for today. So again, thanks for joining in this month's news trading session. I'll look forward to seeing you guys again in September. It will be a very interesting September because then it will be so close to the rate cut expectation from the FOMC. I think we should see a little bit more of a volatile price movement next month. Okay. So with that, good luck to trades, guys, and just be mindful that the market is extremely quiet. So if it's quiet, I would be very concerned. I would be on guard. Okay. So good luck to trades, and I'll see you soon.